Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 9th of August. So Friday's non-farm payroll numbers came in some 70,000 additional jobs more than expected. Now the word on the street was that we were going to get higher numbers and broadly in line with, the estimations that we were hearing were broadly in line with what actually was delivered and what actually we got. But having said that, since Friday we've had quite a few different effects on the market. So today's Markets to Watch newsletter is going to be a little bit different to previous ones. We're going to take a look at these markets, see what's happened, and look at some potential markets for opportunities in the early part of this week. So let's take a look at the US equity markets first of all, because these by contrast are the least exciting at this moment in time, and that's even after the markets managed to push into all-time highs. Well, at least the Dow and the S&Ps did. So if we take a look at what's happened, the job numbers came in higher than expected, so that's good for the economy, but equally puts a bit of a question mark over the Fed's quantitative easing and stimulus programs. It potentially sort of brings forward the date of tapering, or the dates that they could start to taper and start to roll those programs back. Now, rolling those programs back is not good for the stock markets because they are well known to be those programs are well known to be supporting these at these highs. So a little bit of a double-edged sword for US equities. You can see that the Dow here managed to push on to all-time highs on Friday, but since then it hasn't managed to close or hold above those highs. It's actually started to sort of slip back, as you can see. And in all intents and purposes, when you look at the impact across other markets such as the precious metals and commodities and even the dollar, you would have expected maybe a bit more of a show here on the index markets. So if we have a look at the others first of all, you have a look at the S&Ps. We can see that here on the S&Ps the market again managed to push out of this sideways range that prices had been stuck in here for a good couple of weeks, managed to make new highs, but since then the market has sort of drifted back and still coming back in towards this range here again. If we're having a look at the Nasdaq is a little bit of a different story. We didn't even manage to get to all-time highs on Friday, so it actually had an opposite impact on the Nasdaq, and the market actually had a bit of a decline. And it's again, from a broader perspective here, if we have a look at this on the daily like we had the others, you can see that price action rather sort of a little bit behind the Dow and the S&P. So equity markets are not really bursting out with elation here, not as you would expected perhaps by some of the moves in some of these other markets. So there's a bit of a question mark over these, and I think sort of going forward here, the question mark is have these markets and these index markets got again further upside to go, and indeed if there is, how much further upside is there to go? Remember, these markets have had a phenomenal run over the past year as it is, and is there another phenomenal run yet to come, or is this sort of more going to be a sort of consolidation phase? Certainly the way price action at the moment is looking, it's looking more of the latter, so would be more inclined to be looking at intraday opportunities and trading these markets within intraday trading windows. If we come and have a look at the precious metal markets, you can see that these have really been slammed on Friday and mostly overnight as well, in the overnight sort of Asian session. If we have a look at gold here and just zoom out on the daily time frame, you can see the price action here. So it started on Friday, we started to get a sell-off down into 1800. The market then absolutely got pummeled after that, and this happened overnight in the low volume overnight session, and we saw huge sell-off where the market sort of pulled down into sort of technical support, long-term technical support around that sort of 1680 level. Now since then the market has retraced. We've seen quite a bit of a bounce off there, but overall there's been some significant selling and pushing of the market to the short side here. Not only has this happened in gold, it's also happened in silver. If we take a look at silver, again we sort of zoom out of this to get some perspective on the move. You can see that silver has been sold off down to 22,000. It's into again significant support areas where the market then has found an element of support. So there certainly seems to be something going on here with precious metals in the overnight thinly traded sort of times. So been some significant sort of selling here. If we just have a look at copper, because copper is a little bit of a different animal compared to sort of gold and silver. Copper is very much an industrial metal. There have been concerns, well, issues with supply of copper through the sort of COVID sort of period, which is still ongoing. And copper has actually sort of sold off as well. This has been more of a gradual sort of decline, that we're now coming into sort of areas of significant support. So from a trading perspective, I'm looking here to see whether the copper finds support around this sort of area. It's a good sort of technical area where we might start to find support, and if copper can start to sort of break above this sort of level and above this sort of breakout top end of this range here, then I think that's sort of quite a nice sort of technical area where we could start to look for new or continued sort of higher prices, even if we're starting to see moves perhaps up to the recent high around sort of 4,600 there. That still gives quite a distance to the long side. So I don't know if we're going to see support here. You know, there seems to be quite some unusual moves taking place in these markets at the moment. But if we do, then I think that's sort of one of the plays that I'm looking at. Now if we come and have a quick look at oil, you'll see that oil again has taken quite a turn here to the short side. Some strong selling here off 70. The market did rally back up to retest 70 in late part of last week, but now the market is sort of coming down to these lows where you can see again we've had significant support again. So further weakness here in the oil market, look for $60 to be tested. I think you can see here on the daily chart that 60 is the next sort of structure point, significant structure point here for oil. And even if we come out of this and take a look at this on the weekly chart, you can see that from the weekly perspective, $60 is the long-term sort of technical structure point here, which is the next one underneath price. So if we see further weakness, you know, oil, we're looking for opportunities and intraday plays down here, or even swing plays in actual fact, down here to that sort of 60 price point. If we come over to some of these other markets now and take a look at maybe the currencies, well, the dollar for a start has strengthened significantly. We saw a big boost into the dollar, which has certainly helped to push those metal markets to the short side and commodities in general to the short side. That's having quite an impact on some of these markets. Now we might expect that strength in the dollar. In the near term, we might expect a bit of a retracement within the context of technical movement. So move higher, retracement, move higher again, for example. One market here that I think is worthwhile keeping an eye on is dollar against the Sing. So the US dollar against the Singapore dollar. And the reason being is that if we take a look at this on the weekly chart, we can see that we're in the context of an uptrend. The market's pulled back in already, so we've had the retracement, and it looks like the market is looking to continue the strength to the long side, which means we need a move up to at least, and if not taking out, the previous high. So that's quite a move to the high side here in dollar Sing. If we have a look at this on the daily chart, you can see that we've started to get a return here in price action. There is a level here around the current high where the market is at the moment. If I just sort of zoom out, you'll see that there is a structure point through here, so we need to wait for the market to push higher and get through this resistance. So come down a little bit closer to the 4-hour chart and you can see this level of resistance a little bit more clearly. So getting above this level does actually open this market up into a new trading window up to the long side, and there's quite a distance there to the long side. Even if we sort of tighten that level up and bring it down into the highs here, you can see that we've still got plenty of distance to the long side. So if we see much more advancement here on dollar Sing, then I think this is one of the dollar strength plays that we'll certainly be looking for opportunities back up towards the top end of this range and within this new trading window. So that's for, remember, that's going to be for a dollar strength play, and there's a few markets that are looking that way. So for example here, euro dollar, again, if we'd have a quick look at this on the daily chart, you can see that euro is back into a support structure, significant support structure. Again, if we see sort of further dollar strength, that's going to weaken the euro and we could see a move down to 117. Having said that, as I said, I do expect that we may see some short-term retracement in these markets. We may see some short-term sort of weakness in the US dollar, just from a technical perspective at least, if anything else, and that may give these markets a little bit of a time to sort of consolidate around these levels. Now, another market that's not involving the US dollar directly is Aussie CAD, and this is one of the markets where we've got some fairly long-term trends already started to form, and could be one to keep an eye on for continuation of that trend. So taking a look at things like Aussie CAD, here on the weekly chart, you can see that the market has broken out of this long-term support level. We got the move down to a next structure point, and now the market has retraced back up to the previous one. So we're within the context of a short trend, and we're starting to see some weakness already, possibly for a move down to the lower gain and maybe even further. So from a weekly perspective, the trend looks nicely intact. If we have a look at the daily time frame, again you can see that the technicals here looking rather nice to the short side, the market rolling over again and breaking through these lows. And again, if we come down to the 4-hour time frame, again you can see the perspective of this support structure and the short trend that we've already got in place again already. So again, this market could be a nice one to keep an eye on for pullbacks and retracements into structure into the lower time frames. So we're looking at opportunities on some of these like the Aussie CAD as well. So there's quite a few markets there, and quite a few things taking place at the moment, and possibly some sort of big sort of structural things taking place behind the scenes. There certainly seems to be quite extended moves in those metal markets, probably more so than an over 70,000 hit on the numbers, on the non-farm payroll numbers from Friday. So it'll be interesting to see how those settle down and what starts to materialize out of those going forward. So good idea to be cautious, extra cautious, and sort of careful of some of these markets, and take a look at some of those markets that are already in some well-established trends and got some of those potential trading windows ahead of them. So there's a few markets, a few opportunities, and a few things that we're looking at the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.